Good morning, this is Robert Kaars Sijpesteijn bringing you this morning's market update. In the US, health and consumer shares bounced back yesterday, with the S&P Healthcare Index jumping 1.7%. Some of the largest movers were Anthem and United Group adding 4.2 and 3.1% respectively. The large gain in UnitedHealth Group came as chief executive defended the company's possible withdrawal from ObamaCare health insurance exchanges. The US 500 index rose 10 points to close on 2,098.82. The US Tech 100 added 28 points to close on 4,711.90, and the Wall Street gained 66 points to close on 17,856. Moving to commodities, gold continued its climb up yesterday, adding $5 to close on $1,069.8, $17 higher than its 5-year low that was reached on Thursday. Brent crude continues to fall in small increments, yesterday dropping 23 cents to close on $44.26 a barrel. Looking at Europe, equities edged back as the euro rallied and investors fretted about corporate earnings in the region, shifting focus from the ECB stimulus announcement this week, which has caused European equities to climb a little over 400 points in the last 5 days. The Germany 30 shed 118 points yesterday to close on 11,273.8. The UK 100 added 37 points, closing up at 6,405.3, thanks to a buoyed banking sector. The major establishments added anywhere from 2.2 to 4.5% after passing the stress test carried out by the Bank of England. Following the reviews, the Bank of England drew a line under the air of bank bashing on Tuesday, saying it has no desire for new capital buffers and would seek to use its powers to strengthen lenders in good times rather than to tame the credit cycle. The move reflected the government's post-election shift away from the post-financial crisis emphasis on tighter regulation towards a more emollient stance on the city. Although the central bank will establish a new counter-cyclical capital buffer, Mark Carney, bank governor, was clear this would initially be a relabeling of existing capital requirements rather than a new demand. He added that banks were close to meeting their long-term needs for capital, and he also announced that the Bank of England would take no action to curb lending in unsecured personal loans and buy-to-let mortgage markets. There is no Basel IV, he's added, referring to banks' concern that they could face a new and tighter round of global banking regulations. Our objective has never been to raise capital without limit or raise it by stealth, all of which has been welcoming news to the sector. Countering the positive banking sector, struggling supermarket Morrisons will reportedly be booted out of the FTSE 100 index tomorrow as part of its quarterly shake-up. The Bradford-based company has been nudging the bottom of the table for the last 12 months and just managed to dodge relegation in the last reshuffle. Its share price has fallen by 13% to 151.30 pence over the last 12 months, giving the supermarket a market capitalisation of £3.53 billion. It currently stands as the 111th in value terms on the London stock market. Morrisons has been losing market share all year as the supermarket price war has intensified and the discounters Aldi and Lidl continue to win customers. In today's corporate news, Greene King said it had a strong first half in its interim results for the 24 weeks to mid-October, with revenue and profit growth taking place across all divisions. In its preliminary full-year results, Brewin Dolphin said profit before tax was up 7%, while its full-year dividend increased by 21% from last year. Today's economic data in focus: at 9:30 a.m. the UK construction PMI is released. At 10 a.m. Eurozone Consumer Price Index and Producer Price Index will be released. And at 12 p.m. and 1:30 p.m. respectively in the US, NBA mortgage approvals will be released and a speech by Fed Chair Janet Yellen. That's all for this morning's market update. Thank you and goodbye.